Welcome to the Language of Markets live session. Yeah, I said it right again. Pretty good. It is Wednesday, the 5th of June. Take one. Welcome everybody. Welcome everybody watching the recordings. Good to see everybody. Thank you guys for showing up and coming and participating here. So give me just a second. I think we're all set to go. Give me just a minute. All right, let's see what we're going to learn today. Aha, all good. All right, so we're going to keep working on the pressure cookers. We're going to look at a couple markets. Markets are doing their thing, you know, they run their run. Let's see what we can learn that we can apply. I'm going to keep pointing out that no matter what we're doing, everything's in swings. Everything. I know trading can be difficult, frustrating, and all that, but it is simply everything's in swings. And so the more we can just sort of come back to that and rest in that and see that, you know, a lot of things we do like the pressure cooker and such, or whatever, it's just taking that wave, whatever wave it is, and placing a particular structure or letting us notice a particular structure that is within that wave. That's all. So before we get started, we're gonna actually start out really simple with basic instructions, and then we're going to work backwards towards a pretty good understanding of what's going on in there. So this way we can use it very practically for our trading. But before we even get going there, let's just, you know, we're following a couple markets. Okay? We're following a couple markets. So let's stay in touch with these. You know, whenever we do this and we're following a few markets like this, you know, I get in tune. You know, I'll often do various trades based on this. A lot of times we get to the screen, get the trade, we want to do something now. There isn't always something available now. Sometimes it's today, sometimes it's later. You know, even if you're trading on a tick chart, there's not a trade every 2 seconds. Not unless you want to just bang away at it and overtrade. And so, you know, you want to wait, watch, understand it. This is a subtle thing that we all do. You know, we get there, we want to trade, we want to do something, we want to do our work, we want to hit it, and boom. But, you know, we're bringing things to another level here. So it's best to just take our time. You know, we started following this thing out live. And just watching gaps. Of course, I lost my little gapper. Where'd my green go? I'm going to do a little instant video on how to set all this up because I know some people are kind of new to it. As soon as I figure out how to set it all up. I want that one green. And I want that one red. And it's good to go through, and when you're identifying different structures, you know, put a different color to them. It gives you a quick reference. So for instance, I use green for gaps, and the red we're going to be using for the pressure cooker. So we followed this thing out. We started talking about it way back here. And I actually pulled off a trade way back here and then got out. And then it's time to look and see if there's another trade, right? That's done. And so, boom, we're following gaps. Boom, we're following gaps. Boom, we're following gaps. We followed it live into here. We followed it live into here, wondering about the try. Now let's take it forward. And please notice that I am not predicting anything, saying it's going to turn, saying it's going to continue. We're marking it for learning purposes so we can learn on our own. If you know how to mark certain key events, we're all good. And one of the main key events is what we went over on Monday. It's really sort of a a linchpin to other things. We were looking at where did they throw them off the cliff kind of a thing. And we were looking at, see the press. Ugh. We were looking at where did they throw them off the cliff? Where did they throw them off the cliff? And that's the beginning to understanding gaps. And it's really sort of a underneath everything kind of a thing. Just think about it. If you can find where they threw them off the cliff, there's a lot of good information. That's how we sort of pinpoint very surgically where things are going to happen. It's not just support and resistance where, the top becomes do. That's kindergarten. We're actually looking to see where they got thrown from, because it's not just the top or bottom. We're looking for the meat, right? The real buyers and sellers. So if the real buyers and sellers, the real buyers threw it from here, then when price gets here, no matter if it's broken here or not, you see how people can get mixed up. Then, now you have a real point to say, what do I do here now? Now this is going to be, are they going to hold? Are they not going to? What are they going to do? So now we can zoom right into that. And then we can add lines for time and all that good stuff. But that gives us something solid with real buyers and sellers. And so that's all we're doing here, is learning the language so that we can read it. And so you see we marked out this try live. Let's see what it did. And you can see we made a projection, based on some understandings we've made and had. We made a projection, and you can see how this thing isn't doing bad, right? It's showing. It doesn't mean it's going all the way up, but okay, we're now getting a handle on where in the landscape buyers and sellers are. Same thing with this projection. We made a projection. Boom, out there in outer space. We're using this as a projection. Boom. So all of these little things are helping us read price. They're little things. We're going to get to simple in a minute, but I'm adding this stuff in because we are learning a whole language. We're not just learning a paragraph. Okay, so it comes, zooms through, doesn't gap, but it punches back through and holds. And so even on a small level, guys, okay, I want you to see this thing in waves. See, that simplifies life, doesn't it? Remember, it's telling a story. So we want to see in waves. So let's just simplify it from here. We want everybody to see that this thing is just making some waves. It's just going zoom. Okay, it's just making a wave. I lost my little yellow highlighter. I'm going to have to find, no, it's on here someplace. That was my favorite little tool. Where'd it go? Hey, Adam, there you are. I see you over there on GoToMeeting again. You got Slack. I don't want to lose you. All right. So since Adam's here, we really got to pay attention. You ready? So if we're seeing this thing in just waves, and everybody's with me because we can put a structure around this chaos, and we can say, okay, we're swinging. It's a cycle. Okay, we're swinging. We got about this high, and now price is trying. Price is trying. We're just trying to get the story. So now price is, it's trying. It's trying. It's going to think about, well, are we going to test these guys out down here? Are we going to make new lows? Are they going to hold it? Are they going to support it? Are they going to switch at some point? I have no idea. I don't know what that is, Edward. What do you got a little skateboarder guy? He just hitting the wave. See in the bowl? Oh, a surfer. I was close. And I did get glasses too, so it's a good thing. Who knows what I came up with. All right. So we see this thing, and it's working its way down. That's the story. No, don't be quiet, Adam. I just didn't notice you over there. So now let's read it. All right? Let's read it as it's trying. Okay? Let's read it as this guy has hit its projection and it's trying to go down. Let's just read it real easy, bar by bar, so we can get a handle, and maybe we can make some money at some point. You know, maybe this thing will send a telegram to us saying, oh, do this. All right. So it's stalling. Higher high, higher low, you know, kind of tails. It's stalling, it's going up. Got a pullback, got a tail up, and a wide range bar. Okay? Everybody should see this. We have just made a little swing, and we're going up. We've just pulled back very hesitantly, causing pressure, because obviously some sellers are hitting it, some buyers are hitting it, and that pressure gave to the upside. And so we ask, all right, this wave, what are you going to do next? You're going to make a new high or not? Inside bar, still inside, still inside. Now look at the series of lower highs, lower lows. And later on, when we get into our relative lessons, this is just that pattern we were looking at the other day. Impulse, kind of drift back down. Everybody get that? We're going to do some work on that at some point. But if I went down in time frame, this is what we would see, right? It's that press, but it's a press after, Phil, let's keep getting sophisticated. It's a press after an impulse. See? Impulse, and then press. It's that press after an impulse. Right at the bottom, too. At the bottom. See, I see an impulse up and then lower low, lower high, lower low, lower high. I don't know which bottom you're marking out, but this is that same. Oh, it's at the bottom of this now, at the bottom of the mountain now. Okay, I think that's what you're saying. So then it gets to the mountain projection, right? Yes. So what's interesting, you know, about this, Phil, is it's the same. If we can learn to have that kind of understanding, you know, sometimes when a market is getting ready to turn and I want to get in real close to the pivot, and I see it start to press up here after an impulse. So you get an impulse. And let's say, you know, I've got a median line, I've got a pivot fill, right? And I start to see that pressing. I'll use that as an entry because you can see they're just standing on the offer. Just boom, 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 boom. It's got a certain feel to it. So that's just a little thing as we go into this. But it's distinct, though. It's a sloped coil. It's distinct. And we studied presses a while back, but now look at the press in conjunction with the impulse. You guys starting to see how this works? We study some of these structures, and then we add a little context to it. We're doing it slowly. We're not doing it all at once, but I'll hit on these things as we go. So we study the press for, 3-4 weeks, whatever, and then later on we start to add a little context to the press, different positions it's in, different situations that are repeatable, that we can identify, that are telling us something about buyers and sellers. So I'm just going to point these, don't sweat to understand that right now. I'm just going to point these things out as I go. So right here, Phil, you can see the the impulse up, the press, another wide range bar. Okay, so we got a job to do. So this becomes a solid, this becomes a solid marker in here of some sort. We get curious, we watch it. And it's going to tell us where, if, and any sellers, any buyers, it's going to tell us these things. In essence, we've got a little swing here. Grinding. The same way this impulsed up and ground down, this impulsed up and ground up. Everybody see that? I'm just pointing little things out. So it pressed down after an impulse up, and this one is pressing up after an impulse down. And we are going to use these things at some point. Another wide range bar. Let's see what happens. In essence, this becomes a tail. So we have a lot of pivots sort of expanding here. And current. So we're just going to mark that like that. All right, so we worked our way through that. Notice all of this is still happening within this low and this high. Okay, so now we're in this wave. And it's doing a dance within the wave. It's doing its little dance within the wave. And so now we watch and see. Because we got some markers. It's got some dancing going on in this wave. They're stretching for buyers, sellers, okay? So we got some stretching going on. The way I see this right now, and you probably couldn't do a 3-to-1 out of it, is that you could sell this thing for new lows, or possibly wait and see if we get a surprise. Some kind of surprise for a switch. Still unknown. We can watch. We can observe. If you want, we can. These are still same size swings, aren't they? Yeah, they're about the same size. So it's still doing the same size. So if it's the same size swings, think about how you might draw a median line. Where might I draw a downsloper if these are the same size swings? Where's my last swings? You guys see? Let's do a little drawing practice before we get into our lesson. A little median line practice, just to let you know we haven't left median lines. Raj says, from the one at the top, question mark, project to the expansion. You're asking me, I'm asking you. But just think, Raj, if we're going to say draw swing by swing, right? So let's call that a swing. Then this swing to this swing, I would do this. Okay? It's not bad, actually. So if I was drawing swing to swing, I would use that B as the A. Okay. And then what we could do next, Raj, is go this swing to that swing, right? That would be giving us this pivot, correct? Yes. Good. See, you guys see how we're drawing median lines not randomly, but we're measuring waves. So when you draw something like this, you're literally going swing by swing, and you can modify shift it and see what it tells you also. You can see, right, it's giving us a pretty good picture of what's going on. Okay, now, that was the upsloper that turned down. What if I wanted to draw a downsloper? Same thing. I'm going to go swing to swing. You guys see that? And although it's a little skinny, and although it's a bit funky, that is the last relative swing. That is a non-random measurement there. And we could modify shift that if you want. And you can see it's doing that same, see the X marks the spot there. It's showing you the harmony in price when we do these kind of things. So that's just going swing by swing. And this line alone is going to tell us something about when price changes. This median line all by itself. But one of the things I'm doing with these little blue reaction lines is just helping us to get an understanding. So that can start to help frame things up for us. So that's the line I'm going to use. And if you want the line that's making a good channel, you can use that too. All I ask is you use your tools and don't get used by them. See, there's a difference in that one and this one. This is the last swing, swing by swing. And so we'll watch, and we'll see if it can expand below the low, or it can break that, or if it's going to double or whatever. But right now, I got a pretty good handle on tail, tail. And return to center. Imagine this like a median line set. High probability of reaching the median line, where it can either reverse or zoom through. So with this, I'm getting ready to think about trades. Now all this is within this wave, so I'm watching. So you know what? If I see these guys get wiped in some way, I might consider playing for a turn in here. Or I can just kind of go with the program right now and sell it. It is going down. But either way, I'm going to know what I'm doing with it. Either way. Either way, it's not going to be all that difficult to work out. All right, let's do some drawing again. All right, just one more thing. We'll draw median lines. All right, this is practice. We want to learn how to structure the market in waves, see in waves, and go from there. So the first thing you do when you come to a market is look for your major wave. And then you can draw. And so everybody should be able to look at this chart, and even though it's all, ginchy, everybody should be able to do some structure work. And if you're not sure, just start drawing lines, say, here's a bottom, there's a swing. Is that my biggest one? Nah. There's a bottom. Gapped right through that low. And you keep moving this. There's a bottom, different size. There's a bottom, different size. Okay, that looks like my structure. Because you see it bounce off and then just go through. We get kind of curious here. Yeah, okay. So now guess what? I can draw. I know where to draw. In real time, when price started to work its way up, I'd be drawing from here to here to eyeball that. Now that I've made another swing, I'm going to draw my next swing from here to here. And I can leave that like so and watch the center line of it, the median line of it. When it's this steep, I tend to modify shift them, because watch, when you modify shift it, you can see it's capturing more of the whole, the whole angle of the whole move. And then when price gets down here, I'm not going to get too antsy for shorts, right? See, this is how our median lines and knowing how to draw our median lines can help us. When price gets down here, I'm probably not going to get real all antsy and, sell this. Probably not. A good decision. I might buy that, but still, I don't know. And so we watch. And that's price currently. But did you guys see my, 2-second decision not to sell this gap, but to think about buying it? Everybody see that? I just whipped that out. Why? Well, because swing, swing. We're at the edge of a swing here. Swing. Swing, swing, right? We're at the edge. It might keep going, but yeah. So, all of this can factor into your analysis, using median lines as well. But first, you might want to know where to draw your median lines so you can measure what the last swing is doing. Measure what the last swing is going to do there. And then we can put the next one in going up and get curious. And, if markets start to bust both of these, then, maybe there's some sort of a change going on. These can be dangerous little trades, but this one I think gives you a pretty good indication from this run that we're at least going up for a minute. At least for a minute. But to tell you the truth, I'd still kind of rather sell this thing. So, there's our gap. So we watch. We watch. We'll see what it does from here. And the truth is we don't know what it's going to do. It might fly down to new lows. If you wanted to be short, that's your time. You see we have a V thing going on here. Okay? We have a V thing going on here. So if you wanted to be short, good time to be short. You want to be long, probably down in here somewhere. But we don't know what kind of weirdness is going to happen over here. And this thing might just make it loud and clear at some point, what we need to do. And then we can make money. And, if it's not loud and clear to you, then don't mess with it. If you want to just hit an area that's solid, hit the area that's solid. Right? Somewhere up in here. And that way you're at least going the right way in these waves. So it's just a little lesson on how to draw. So we're going to keep an eye on those guys live. We're going to keep an eye on those guys live. All right, so let's get to our lesson here. We're going to mark some of this junk out now. We're going to see what are they going to do right here. What are they going to do? Got to swing, swing. We come over here, and what if we doubled this guy out? Something like this. And we'll keep an eye on it. Let's pick a stock. One we worked on. Okay, this was a few weeks ago. You guys remember we did this fast weekly? This is a stock we worked on, and we were pulling back, watching swings, and we left it live up here. So let's do this and go back over our instructions again. The instructions are rather simple. And after we get a handle on the instructions, then we can work into an understanding. All right, so here's what we're going to do. We're going to watch a market. Okay? We're going to watch a market that makes new highs. We're going to look for the place that they threw them off the cliff. So let's come back in here and make some instructions off of this. It's pretty simple, really. Number one, identify a confirmed swing. Okay? See this? We did it. We had a new high makes a new low. That's what a confirmed swing is. Definition. You see a new high, boom. Right? You see a new high, low's confirmed. It's a swing. It's telling you something. All right. Next instruction. Identify and then we'll go practice a little bit. So now we're going to, we got to think about how to tighten this up along the way. Follow price back under that high to, and I'm going to call this the POI, okay? The POI is point of ignition. Or point of inception we can use. Now, this is just a fancy way of also saying gap, okay? So we're going to follow it. Once it makes a new high, you just follow it back underneath to where they threw it off the cliff. You're going to follow it back underneath. And so what's going on here is that as price is right here, so let's understand this a little bit. As price is right here, it's getting hit by some sellers, okay? Price went up, it pulled back. Price went up, it pulled back. Buyers picked it up. This is why it's called a pressure cooker. So these buyers are taking it up. These buyers are taking it up against that down move. So it's naturally going to hit a few sellers in there. And if you got questions, hit me on the way. And so the pressure from these buyers hitting these sellers is what's going to make the structure. There's pressure from these buyers hitting these sellers. So it's kind of like this at this point. It's like that, you know, and price is like this, and there's pressure going on. And you don't know who's going to win. One of the beauties about this is you don't have to know. You wait till somebody wins. And then you follow the instructions. So you don't know who's going to win. You just wait for somebody to win. And you do that by a new high. And then 3, we're just going to say draw a red box from POI. And observe. What this is a projected mountain, okay? But it's a projected mountain in a particular place. Pressure pushing down on me, pressing down on you. No, the Bowie song. Under pressure, yeah. You're old. So what this is, okay, it's a projected mountain. Now look at what we're doing, guys, all right? So these are the simple instructions, okay? Then you mark this thing out. Just like that. Simple instructions. Okay? Now, the key is what we went over on Monday. So I could say the essence or the principle is derived from where they threw them off the cliff, right? The POI. Now, once we understand the essence of this, and it's basically a gap, but it's basically a gap where? Where is it a gap? So we've learned to work with gaps, okay? We've learned to work with gaps. We've learned that a gap is going to be a wide range bar, which is bigger than the last 3 bars, with a space in between the previous bar and the subsequent bar. So we've learned to work with gaps. And Pete, the way we mark out gaps, if it's an up gap, we just mark out the bottom third of it, like that. If it's a down gap, we mark out the upper third. And we'll be doing full-blown lessons, because just looking at this pressure cooker now tells me we're going to have to do a little bit of a gap lesson. We're going to have to do a relative gap lesson. So this is this, okay? It's a gap. And so if it's in the upper third of the gap, we mark, or if it's a gap going up, we mark the bottom third. If it's a gap going down, we mark the upper third. Why? It's not just because it's cool. It's because this is where they threw them from. Okay, this is where somebody bigger than a one-lotter jumped. Somebody blinked. Something happened, one way or the other. Something pushed price. A gap is a supply-demand imbalance, a very quick supply-demand imbalance. It's a volatility thing. And so from this, boom, it becomes someplace we need to look for price. We did this all Monday. And so this is easy with a single gap. So part of the next lessons is to be able to understand relative gaps that are more than just one bar. We need to be able to understand what a relative gap looks like. Like this is all being a gap right here. This is all one big gap. You guys see it? So this is a coil, and this is all gap. This is this, this is this, this is this. Okay? This is all gap. And so we'll do some more lessons on the relative gap part. But you can see the way it's shooting up straight with no resistance. A gap has no resistance. It's just cutting through air, right? Hard up and float too, right? Thanks. You're seeing those all over the place, Phil. Hard up, right? Impulse and float. And so this is a gap, this is a gap, this is a gap. So it's important we learn the relative portion for this, because this isn't going to be just one bar, all right? But it is going to be a gap. So this is going to be a relative gap. So we're going to have to go over relative gap lessons. But if we just hang with the basics, and that is where they threw them off the cliff, that's all. Where they threw them off the cliff. Now what we're doing over here is we're taking our little old gap, which is pretty much a base structure, foundational structure having to do with swings. We're taking our little old gap and we're placing it, or we're looking for it in a particular place in the swing. So we're taking our gap, and now we're looking for it in a particular place in a swing. So everybody get that? We've got our little old gap, and now we're just adding a piece to it. So we took our gap, which would be this. See this gap? That's a gap all by itself. And now we're placing it over here. Now, we're in the swing. It's part of the impulse leg. So we're placing this in the impulse leg. So let me add one more thing to this. Okay? It's basically a gap that's in the upper half. Okay? So for this pattern to qualify, it's going to have to be in the upper half of this impulse leg. Meaning, if it starts down here, it's not going to be a pressure cooker. Does everybody get that? Maybe that needs to go under the instructions here. This is a projected mountain. Needs to be an upper half of impulse leg. And so this is the impulse leg. And after we get done with all this, we'll make a PowerPoint over the whole thing, okay? And so we're breaking up this impulse leg here and looking sort of, inside of it. And there's a reason for this. Shane, I don't understand what you mean by mountain. Sorry. A mountain is a structure. Pete, a mountain is just basically, it looks like a mountain. Okay? Price goes up, price comes down. And it looks like a mountain. A valley, price goes down, price goes up. It's just a very basic price structure. And so we have some very basic market structures in order to read price. So if we looked at this, like here to here, this is a valley, see? And you know what? You put a mountain on top of a valley and you get a swing. But we'll be going through those again. Don't you worry. We're going to go through those again. I'm going to jump into this simple, and we'll be going through all that again. But it's just it's a structure. So we only have a few structures, Pete. We look at mountains, valleys, and a mountain is just, comes up, comes down, and a valley is its opposite. It's one of the most basic things you can look at and see on a chart and, make decisions off of is mountain and valley. And generally, a mountain is going to be projected from what? A gap. So the mountain's going to be projected from a gap. Let's see if we have anything in here. Like, you see this gap? This is projecting this mountain, right? See how that's simple to see there? And I know this is kind of basic, but it's good for us to go over it. Same thing here, right? If we look at this gap is projecting the opposite, a valley. See it? And so it's basically a very simple, you're going to see price like this in some form or fashion. Of course, it might do something like this, but it's going to be sort of an up and a down. A mountain is basically a gap. And so you can see that there's a valley here, and you can see that there's a mountain here. And so it's just a price structure. And see, if we use this as the base, now look, now we're projecting a possible valley underneath that mountain. And do you see how that is really just a swing, Pete? You get that? So you see price come down here, stall, make a mountain, then come over here, stop, make a valley, and it's a swing. It's cool, huh? So a mountain on top of a valley is a swing. And so generally we mark these from gaps. And by the way, this is the kind of thing median lines do. When we look at a median line set, watch, it's going to be basically a mountain sloped and a valley sloped. See, this is a mountain sloped and a valley sloped. So it's just another way to see it and another way to organize the chart. And it's very seeable. It's very seeable. Gap. And then when you get to the mountain, you have three types of trades. This would be a push trade to push off the mountain. This would be a type 2 trade for it to expand then continue. And then this would be a type 3 trade for a reverse. See, look at this. This has been a hot topic, this stock. You see, if you kind of waited for just a mountain and a valley here, you could make some intelligent decisions off of this, one way or the other. And this ain't no little bit of money. We're talking 15 down to 6. That ain't no little bit of money there. This thing lost half its value getting down to here. That's fast moving. And all because you can come in here and see something as simple as a mountain or a valley. That's all. You can see something as simple as a mountain or a valley. And then you can also begin to learn to see and process. Oh, That might be one side of a valley. And that might be the other side of a valley. Okay. And then you can make all kinds of interesting things going on there. You can get long, you can get short, you can wait, so on and so forth. Pete and everybody else, it's important that we learn to, well, practice these structures, okay? Today's kind of loose. We're just keeping it loose today. I'm going to tighten it up probably Friday. Today I'm just sort of introducing. But it's very important that we practice these structures to the point where we can even extrapolate and see it unfolding live in its options. Look at what we have here. Where's the high? If I go like this, where's the high? Here's my last swing, right? That's our last valley. Is this the high? Let me redraw my model. The basic instructions are to wait for a new high, follow it back underneath, and draw a box. Now think about this. This has steps. Okay? This has steps. Reaction leg, one step. The impulse leg stalls under pressure. Step 2, creating the pressure cooker, right? This contraction then expands to a new high. You know, 1, 2, step 3, step 4, whatever. We'll break it down. And then that is projecting the same way we projected a mountain or a valley here. That is projecting a possible mountain. So if we can do that, and this is the high, do you guys see? It's so important to feel price. Do you guys see what price is doing right now? Right this very minute, where it's at, if you can just move forward, right? It's pressing, right? Do you see it's hitting? Do you see right this very minute, it's hitting some sellers in here. We don't know if it's going to make a new high, but it is, right? It's got pressure from these guys buying it. It's got some sort of pressure, otherwise it would not have stalled. If there was no selling pressure, it would not have stopped here. It just wouldn't have stopped here. And so although I can't say this is an official pressure cooker yet, I can see it possibly unfolding. Okay? I'm reading price, and I'm not doing much more with all of this. I'm not on the message boards. You know, I can add a little bit to this, but I can say, look at that. There's something going on here. Now, maybe it doesn't do it, because from here, if it's to be a pressure cooker, it needs to go blasting through the high. Now, with this understanding, guys, I've taken trades right in here before the high. And then after the high, I've taken them off, and then when it's come back, I've put them back on. Because I'm just marking out gaps and understanding something about the process and all that. Now, I don't expect everybody to be doing that, but I do want us all working towards that understanding, whether we're looking at pressure cookers or gaps or anything. Mountains, a mountain has a process, right? See, we looked at this thing, gap. Oh, that's one part of a valley. 2 parts of a valley. Now I got a choice. So now I'm not just following price after the fact, I'm following it during. And everything's all good there. And so I'm reading. And by the way, Adam, if we can read the bars, right, we can extrapolate the bars relative and read the big structures the same way we read the bars. It just takes a little bit of practice. It just takes a little bit of practice, right? That's all. If you can read the bars, then you can read that, mirror bars is one big fat mountain somewhere. See this? This is mirror bars on a bigger time frame, bar by bar. And so we want to learn to see that. All right, so we can look at this and wonder, so let's go back to fast. So this is the basics, okay? So you're going to identify a swing. I gave you a little bit of what's going on in here. All right, there's pressure coming up. There's pressure pushing down, and that causes a contraction. This is how movement happens. This is all principle-based. And then an expansion. And we don't know which way it's going to expand, but the beauty of this is we don't have to know. We wait for it to actually happen. And then we need to do practice on the 3 types of trades. So let's just look in this market. And we'll do a little bit of practice here today. And then we'll start to tighten up this lesson a little bit. I wanted to keep it loose today. Okay? So we don't know anything. All right? We have a pullback. We have a new high. So the instructions, let's move them up over here. So we're going to identify a confirmed swing, and that would be this, number 1. Then we're going to follow price back underneath that swing. We're going to follow price back underneath that swing, okay? So we can see we have a confirmed swing. So everybody follow it back underneath, and we're going to be, remember, this is the impulse leg. So it's going to be somewhere in this upper half here. And so do you see where they threw price? Does everybody see where they threw price? I'm picking one that's really obvious here. They're not all obvious. You see the press, and you see the expansion, Adam, right? See, that's half the battle, Adam, right? Just being able to see this stuff and recognize it. It just takes a little bit of practice. And don't sweat it, Pete. Once you get into some of my lessons where we just kind of go boom, boom, boom with the structure, you'll start to get it more. I cycle back around it. It just takes some time. But we're all going to redo our structure lessons one way or the other. The 24. Yep, right? So you want to follow it back. And you see, this is where they blasted it from. And in your practice, don't be chintzy with your box. All right? In the end, price is going to tell you about it. Because this is a projection. This is, what did I say? It's a projected. It's a projected mountain. Okay? And so now what we've done was we've taken our little old gap and we've placed it in a very particular part of the swing cycle in order to measure some things. And later on I'm going to show you how this is the difference between what makes a mountain and what makes a swing. So this is the area where they hit some pressure, which is natural. They're going to hit something along in here. These guys sold it. They're going to hit something. And this one, and it just rips. And then from there, we're going to start making observations. And so this is a way to follow a market. This is a way to get oriented to a market. And it's very simple. Does everybody agree that the basic instructions are simple? The basic instructions are really, really simple. Okay. Now observe you know, if price gets back the 3 types, it might never come back. That's information. Now, the one thing I want to caution everybody against is you don't always see one in the chart. Okay? If you don't see one that's dead obvious, ignore it. Don't make it happen. What I want is a clear-cut blast through the high. Not just, a poke. I want a clear-cut blast through the high. Even this is a little less than what I really want, but it's not bad. I want the high to be taken out with a vengeance, or the low to be taken out with a vengeance. Those are the ones that I really want, because that's saying we lifted it. Now, classical support and resistance says, oh, resistance is broken, then resistance becomes support. But look, this is where the support is. This is the secret support. It comes from where they threw it. This is based on them. Them. They threw it right here. And if they threw it right here, this now becomes some place for us to, be able to make decisions. Put real money on the line. Qualcomm Daily, we'll take a look, Phil. We haven't looked at Qualcomm in a while. But we got a few live ones we're going to look at, all right? We got something going here. All right, so we want to see this. Now, this doesn't tell us anything about time. It just gives us a horizontal level. We can add median lines in here when it comes to time. This is just giving us a horizontal level, plain and simple. So if we did like I don't know, something like this. You see, this over here is giving you time and space. This is just giving you, the space in here. So this is giving you the time also. But either way, we want an understanding. Okay? So, if you're trading these from a practical point of view, it can get a bit difficult on the management end because it can hit this level over and over and over. All right? Now, sometimes in a momentum market, you get one hit and boom. But we're going to need to do a lot of practice on this. But again, we want to see where it's clear that underneath the high, they ripped them. Some of them are not so clear. Like if we looked at this one. And don't be afraid of being wrong, okay? I do see a gap. So where did they throw them, guys? Where did they throw them from? They threw them from here at least. See the pressure? So I would do this. And then I would observe the 3 types of trades. So this would be a mountain. So you can see the small move here. If it hits here and runs, that's pretty good momentum market. If it comes through, that'd be a type 2. If it comes back to here, that'd be a type 3. So it's not a 1. You see it's a good level, right? It's a solid level. It's maybe a 2. It's not a 3, right? And then blast, it's a 2. Now watch it come back into play. Everybody see that? So this one, Adam created this one. And I want you guys to see that. Pete also, right? You can see how one creates the other. It's nice, Grace, because you can start to, I don't know, you can see the beauty in it. You can start to see the beauty in that maybe it isn't all so random. When you start to see it like that, oh, this is doing that and that's doing that. And we're just looking at zoom, zoom, zoom. So remember, if this puppy zooms, what's our next question? Does it make a new low? Nope, doesn't make a new low. Does it go back through it? Yeah. Okay, hit it. And this is a weekly chart. This could be a CL chart. Doesn't matter. Doesn't matter. Price is singing. That's it. It's dancing, Phil, right? Singing. It's dancing. And when we get that, we can dance with it. And it all starts with a read. And it's not that this is just the end-all, be-all, best thing since, sliced bread. But this gives us something we can solidly do some work in seeing a market. Now notice when I'm doing this, I'm not seeing all the other little things. I don't really have to. I'm just viewing things based on this. And you'll start to see markets take certain shapes. And so, Pete, here's another mountain. See the gap quality of it? That's a mountain. And right here, this is live. This is going to either be a push or come back through, be a type 2, or be a reversal. So that's a mountain right there. And so it might be a mountain and then a valley. And so one of the things, we can use just a few of our simple tools. One of the things that might help me, let's just talk practical decisions. One of the things might help me, I know I've given up going step by step this last week, but we're going to get back to it. Let's just talk practical decisions here. I have a pressure cooker, okay? One of the things that might help me decide whether I want to hit it here or not would be to maybe look at the size of the swing. Maybe not. Taking my chances. See that? That might be something that tells me that this might be a type 2. Raj says the first swing had 2 gaps in the impulse. The second swing only had 1 gap. Is that something to consider when planning entries on the pressure cooker? Not on planning entries, but it's something to consider because it rolls into the whole show, Raj, and it's something we're going to touch on. But that's a good observation. It makes sense what I said. This makes sense what I said about type 2, right? Okay, but for you, Raj, think about it like this. I'm just going to do this once for everybody because this is going to roll into a different framework, a different gap. Imagine there's a gap here, and then a gap here. This is a gap. True. And this is a gap too, isn't it, Raj? It's kind of what you were saying. The impulse leg's got 2 gaps. One's a minor, one's a major. So think about it this way, Raj. This one is actually like a minor. And this one is like a major. So now you've even broken it up a little farther. So you're front running me. But think about that. And so we've broken the impulse leg up a little farther. All right. I'm moving too fast now. So just practical decisions. And so, if price is up here, now it might just make a little more sense to hit this here and not hit that one there. But I couldn't even get this far unless I could identify this. And the only thing I've done was taken the impulse leg and identify a gap in the upper half. Okay? We're taking the impulse leg, and you get a beautiful stop too in that lower one, right? And so we take, this would be a type 2, and this would be a type 1, both based on the PC, on the pressure cooker. I don't know, should we start calling this politically correct? So this is just because we can identify a certain event in price. Now, they're not all going to be very clear. So, for instance, look at here. We have a new high, right? You don't really see one in here. It's not here. Don't mess with it. Leave it be. I want this. I want this beautiful stall. In here. That's what I want out of this guy. Now, of course, these things are also relative. So let's look at the big swing. It's not that obvious, but I do have this. I like the ones that are dead obvious that really blast the high. See, this, it's still a little bit different than this. See, I want to see that pressure being squashed. And woof. Then I want to see it take the high out with a vengeance. And we're going to have to practice with this. I want to see it take the high out with a vengeance. Because that's showing we got a real serious gap. You know, and then from there, you know, you make your decisions about what swing you're trading, what line, etc. That looks like what the CAD just did this week. Well, let's have a quick look at Qualcomm, and then let's see if we can find something live that we can do. We're still watching this spot live, by the way. So let's have a quick look at Qualcomm. We got kind of bored with Qualcomm because it wasn't doing anything for a long time. I made my first little fortune on Qualcomm back in the 90s. That was my first little fortune on Qualcomm. Way back when. Holy cow. I don't know, what are you going to do with that, Phil? There's no pressure cooker in there. Is that chart for real? You'll send me, you're going to have to because I don't see anything. There's no pressure. It just went poof. It's a vacuum, yeah. Qualcomm. Look at this. We got bored with Qualcomm for like, what, 2 years? And now look at it. So now I guess it's time to pay attention to it. Wow. See, this is when I was trading Qualcomm back in here. You guys want to know what a bubble looks like. And by the way, when you were buying shares of Qualcomm up here, it wasn't 92, it was $992 per share. They hadn't broken it down yet. And this wasn't trading though. This was, you know, wake up and get long. All right. So let's go look at the CAD that Gracie mentioned. I'd like to have at least something live we can work here. So if I went swing, see, it's so low, I don't know if I do that. And yeah, maybe, you know, one of the things I want from this, Grace, is, and you might be looking at something else, is I want this thing to give it a, maybe something of a little try in here. And that might be it. That's kind of above the low, because the difference in this is it's so close to just being a mountain here. There's a difference between just being a mountain, because remember, the pressure cooker is going to come above the swing. So this is one of those that are, so this is like I'm on the sideline with this one here. You know, I'm on the sideline with this one because it's so close to the low. Because what we're looking for is something that, oh, you were looking at the 240? All right. Good. Here we go. How about this, everybody? Identify your swing. See, we should be able to look at all this noise and identify a swing. Just take the high and go like this. Take the low and go like this. Follow it back. Do you see where they threw him off the cliff? Is this what you were pointing to, Grace? Yes. Does everybody see? Does everybody see that there's all of this selling pressure right here from the top? And then there's a decide, but you don't have to predict that decide. Does everybody see the difference? There's all of this selling pressure mixed with buying pressure, and we don't have to decide. We just watch it and say, ah, this is where they threw him off the cliff. I can't emphasize this enough, this where they threw him off the cliff is some sort of a marker, because it's the quickest, easiest thing we can use. And then if we take that and we place it in a particular place, right? If we place that in a particular place in the swing, then we can follow price. Before we get here, Grace, I have a new low. Does everybody see where they threw him off the cliff? I mean, is it clear? You follow it back up into the swing above the low. And if you're watching the recordings, play along. It should be clear that this is where, and if you have to, walk it bar by bar. This is what I like to see, Grace, even though you were looking at something else. Right here. I like to see them making a try. Hey, Nate. I like to see them trying to make a higher low, and it's hovering, and it's hovering, and it's hovering. They haven't really decided. Boom. This is where the decision happened. Okay. And Nate, I know you knew this, but we're going to go into some other dimensions of this while we're here, this pressure cooker. And I want to get a solid understanding because it's got secrets to tell us. All kinds. And this is a very simple way to see this market. And then we watch and we say, okay, there's a type 1. Maybe we wait for confirmation. It ain't a type 1. Just ain't a type 1. Well, we got a little sloppy on it. Maybe it is a type 1. All right, then we watch. It's good to see the sloppy. All right, that looks like for real now, doesn't it? Type 1, try. Yeah, right, that looks like for real now. And let's see what it comes out to. Boom. Type 3. So that was a read where you might try a type 1, you get stopped or you get a little juice in it. You might do a try. You might go for a type 2. And by the way, there's ways to project all of these. Or you might go for a type 3. All based on where they threw them off the cliff. And it's part of this impulse leg. And so we see they threw them off the cliff and then ripped it back up. See, I wish we'd have been doing these lessons when I hit my stupid short over here and got busted. Now let's take this into live. So that's interesting information, but I still want to get the feel of this across. coming up buyers, coming down sellers. You don't have to guess. You just have to look. That's where they decided. And this swing is this size. And current. So this is a cool one. We'll watch this guy live. So it's actually doing, it's in the process of trying for type 1 in here. I recognize this one pretty easy because, again, you know, when these things start to rip, you know, they usually rip your own head off somewhere. I forgot where I was at. I think I was doing this, right? So I want you guys to see that a pressure cooker, when you're short, the pressure cooker is ripping your head off. But then again, before last night, what, touching it, Grace? It's right here right now. Oh, the last high. Yeah, it broke a high. Let's look at the size of the swings. I'm going to say that this is a different swing than that swing. So I'm going to say, right, let's just dice this out a little bit. I'm going to say that's more like a minor swing, Grace. And I'm going to say this is the major with the high. Yeah, good eye. I said this is dicing structure out. See, this is this big. Different animal. Very good. You got a good eye. Good eye. And there's your structure in this market. So there's a pressure cooker within the minor structure. Yes, then you'll start to see them in the minors too. You see that? I'm not going there yet because it's tough enough to work with one. But there is a way to work with two as a setup, and we'll go there, but not now. I've already done too much extra, but I'm glad you see it. And so, yes, the pressure cookers come in minor and major. And there's a way to use the minor busting into the major if you want, or to use it, you know, in a lot of different ways. So, yeah, the pressure cookers obviously come in minor and major, but that's a little too much information at this point. But run with it, you know, if you're starting to see it. Boy, I'm going to have to really tighten up my own slack here, huh? You guys are getting good. Getting all ahead of me and everything. But I like that you saw this structure. You know, I like that you saw that this is, you know, this is all, see, we can dice out, even though it's subtle, we can dice out the majors and the minors like this. And so this is hitting over here like this. And we can watch, we can observe. If nothing else, Pete can see the whole, Pete can watch the whole Mountain Valley. How about that, Pete? We'll watch a Mountain Valley live. Lovely, right? So we'll watch this Mountain Valley live. You know, rather than me tell you what to do with these things, let's watch them for a while. Then we'll get closer to the setups, okay? But, you know, you don't have a stop for a short, okay? Number one. If you wanted to get long, you had something of a stop here, but you're a little late. You don't have any kind of bar confirmation for long. I think we'll have to wait and see. This is going to be a fun chart. Although I'm a little scared to trade it, especially now that Grace is on it. Maybe I'll get her to send me an alert before she does anything. All right. I think her and Nate might be in cahoots. You guys might be in cahoots. So this is fun. We'll watch this. So we're watching the swings. We're watching the current live pressure cooker. And we're a little curious about this cycle, this mountain. I'm a little excited. There's so many little subtle things I wanted to go across, but we're going to have to do this by the numbers, guys. So we're going to have to slow down Friday because I am jumping around a little bit. And I do know I have a few new people in here that we need to go through some structure lessons as well. Some just mountains and process and all of that. But the basic instructions are simple. So if we just start with the basic instructions and go there, then we'll go from that. Clearly, there are many ways to hear the language of price. Yes, but we pick one and we work with it also. And we sort of see in that framework. And then we can also see on a minor level. And, depending on how much you can do at once without getting overwhelmed, you can really begin to put it together. At first, it's just like you go to a foreign country and you're trying to get by, where's the bathroom and all that. You start to learn to say this stuff. And, pretty soon you want to, be able to get a little more fluent, right? A little more fluid with the language. All right, so we'll leave that guy live. We'll watch a few of these other guys. Euro Swiss is on our radar. And just take that basic instructions and do a little practice. So I think what we need to do step by step is maybe draw models of the 3 types of trades and the tries on them, and then keep looking at several examples. And then we'll go into minors and majors and that kind of thing. So we'll take it slow. We got a few weeks with this one. So thanks, guys, for your attention and viewing this. And you can take this on any chart. It doesn't matter. You can view it on your tick charts, your stock charts, your 20-minute charts. Yeah, I think we have lift on there. And Phil, you're going to send me a Qualcomm chart somewhere. I think, yeah, we have lift on here, right? We have lift and Uber. And so we're going to get to all that too. Especially if I can incorporate this particular lesson. All right. Thanks, guys. We'll see you guys on Friday. Take care.